George, as Phil mentioned, Tesla is dominating EV sales in the U.S. That stock is the best performing stock in the consumer discretionary sector in the first quarter. You have a buy on the stock. Do you see these new rules, as the Treasury lays them out, as a catalyst for Tesla and maybe the EV producers writ large, the sector as a whole, from here?
There was a time when investors were skeptical about holding onto their Tesla stock, and many did not buy the stock because the average Tesla stock return did not look great in the short term. However, things have certainly been changing, and Wedbush managing director and senior equity analyst Dan Ives has said that Tesla is on track to beat this year's delivery consensus. Find out why he is extra bullish on Tesla stock and what to expect from the coming months. Hey everyone, and welcome back to Tesla Tomorrow. Ives is a Tesla bull and one of Wall Street's top analysts. The stock analyst had previously said that Tesla stock could rally 35% this year, since its recent price cuts have already been a huge success in China. According to Dan Ives, Tesla's recent price cuts are huge and a mark of its success story so far. He added that China represents the core of the Tesla global growth story, and it appears that the price cuts have been very well received by EV consumers, and thus accelerated purchasing decisions. The stock analysis had also said that Tesla's price cuts were a significant sign that the company is getting more aggressive as competition heats up in the EV industry. Why does Dan Ives believe that Tesla will beat this year's delivery consensus? Keep watching to find out. But before we start, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Tesla has completely disrupted the auto industry, to the point that nearly every major legacy automaker has now implemented an EV plan or is actively producing one. It has also sustained a very high top and bottom line growth rate, despite being a far larger company today than it was a few years ago. Tesla stock was recently down more than 6%, despite record deliveries in the first quarter of the year coming in at nearly 423,000 vehicles. The car company beat estimates numbers, although some analysts may have been hoping for more given the latest price cuts. For some analysis, Tesla did not beat their consensus, especially the one that retail Tesla stock investors had in mind. Some consensuses were even much higher. For instance, Tesla bull and billionaire Leo Kogoan, who was all in on Tesla as a stock investor, was at 450,000 deliveries, and another Tesla bull, Ross Gerber, was even higher than that. However, Tesla clearly beat the Wall Street consensus, and most analysts will agree with this. The debate is now about Tesla's margins, which are expected to be made public on April 19th. Tesla is currently improving, and its stock performance is performing quite well. The stock price has doubled so far in the first 3 months of this year. Just in January, there were analysts who predicted Tesla stock to go all the way down to $60 and even lower. Some predictions had it that if Tesla stock was at $20 per share, then that would still be higher in a recession. But the good news is Tesla stock is currently 10 times above this price. For Tesla's delivery number this year, street investors are focused on 1.8 million deliveries, but judging by Tesla's current performance, we could say that the car company is already on or actually ahead of that pace. Tesla can be described as a disruptive technology player, and not just a traditional automaker. While the company may be compared to the likes of Toyota or others, the automaker should be viewed more as a tech company, as this has been reflected in the stock, especially over the last few months. The major concern, however, is that Tesla is held to a higher standard, and they need to continue to produce more innovative products. Not all Tesla competitors can follow the path that Tesla has created. For instance, Toyota supposedly is really focused on EVs now, but in fact, it is not clear what plan it has in place in order to achieve this. Several organizations have demanded Toyota to shift to electric vehicles, but the problem is not about whether it needs to shift to EVs, but rather how it is going to get it done. While speaking on Tesla's price cuts, Dan Ives cited that Tesla's price cuts are clearly helping sales right now, and there's talk of further price cuts ahead. There are debates as to whether Tesla will need to do more price cuts in China or even in the US as the EV arms race plays out. Because of Tesla's margin structure, it gives the car company so much more flexibility than other EV companies to do these price cuts. And this may continue to be the story, especially as battery costs ultimately get reduced over the coming months and years. Dan Ives seems to be one of the few analysts that understands Tesla stock. Most other analysts simply just do not get it, and are so focused on the short term that they ignore the long-term picture. Tesla is most likely going to acquire a much bigger percentage of the auto market share, which will then allow the automaker to benefit from the improved economies of scale. This will prevent other competition from really coming in, because if Tesla already has ridiculously developed economies of scale, then anyone else that comes in, then they can afford to sell vehicles at much lower prices. In the last 5 years, Tesla stock has been up significantly, and while investors may have been quite frustrated at the previous drop in the stock price, there is clearly a better future in sight, even though a lot of people are struggling to see the growth opportunity. This is a company that has been delivering hundreds of thousands of vehicles and still promises to deliver more at lower prices, and so this could eventually turn into a positive margin story. However, there might be some competition in the stock market as some Tesla rivals are starting to get the attention of big investors. Shares of Lucid Motors surged more than 90% amid speculation that the Saudi Arabia's Public Investment Fund plans to buy out the company. Shares of the California-based company jumped more than a third since January 23rd, making Lucid the third highest gainer and the sixth most traded stock on the Nasdaq. Therefore, if indeed the PIF ends up buying Lucid, this may pull more attention to it, as investors who are looking to put their funds into an EV company may consider investing in Lucid and not Tesla, which is currently the leading EV maker globally. Dan Ives has not always been one to be bullish in every move by Musk, especially with Twitter. The Tesla investor said sometime last year that Elon Musk's increased attention to staging a turnaround at Twitter is creating big risks for Tesla's stock. According to him, Musk's Twitter project has turned into a circus show, which has created controversy on a near-daily basis. Elon Musk has recently disclosed that Twitter is trending towards becoming profitable. And this could mean a few things. This could be good for Tesla and its stock and its investors, because it would mean that Musk is less likely to sell Tesla stock in the future. This is no doubt that monetizing Twitter will be a bit of an upward battle, as it's always been with social media platforms, with Elon Musk paying $44 billion for something that's believed to be worth closer to $20 billion. However, quite a number of interesting things are happening on the platform. For example, Twitter's subscription service Twitter Blue rolled out at the end of November, and the monthly fees promised access to bonus features including an edit button, boosted visibility, and fewer ads. Musk may actually be the best man for Twitter at the moment. Twitter's user numbers and revenue from ads had languished for a long time, while rival social networks sprung up and enjoyed explosive growth. The company is known for being small and influential, but this was not translating into profit. According to social media expert Matt Navarra, Elon Musk is a master of PR spin and innovation and creativity, and he's not afraid of controversy or ripping up the rulebook. So maybe his revolutionary tactics would reverse the fortunes of this ailing firm, which he says was losing $4 million per day when he took over. Elon Musk recently changed the Twitter logo to the image of Dogecoin for about 1 second, something the Twitter CEO had previously promised that he would do. Although this may not carry any significant advantage for the company, it does show that Musk is very aware and is interested in doing the things that he promised to do with Twitter. What are your thoughts on Tesla's Q1 delivery? Let us know down below in the comment section. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.